our project is based off we're trying to rent cars out on an app platform called Turo. And we're going to be renting 5 different cars. So a Jeep Wrangler, a Ford Mustang, a Nissan Altima, a Honda Accord, and Toyota Sienna. And this project is basically to see the profitability of that business and how, what are the different costs and revenue that is associated with, and if it's a profitable business overall. So the first thing we're going to dive into is our assumption. So.
All right, so how I broke it down is going to be the days rented per the year, which in our base case, it was 192, best case is 261, worst case is 141. And we also, again, with the first year, will be at 50% capacity because we have to start up the actual company. And the WAC is determined the comparison of other car rental companies, 8.5%. And the days booked per month, we're going to have base case 16, best case 21.75, worst case 11.75, with the rental revenue per vehicle being the total shown. With the daily booking price, we're going to go with $81 for our base case. Best case will be 85, worst case will be 74. Just the daily booking price for the cars with our 5 vehicles. The irregular revenue, we have listed the revenue from non-regular expenses, $55 in each case. The car drop-off is going to be a third of that, $50 for each case. Prepaid gas is the same, bringing the total revenues to $81,280 for our base case. Best case is $115. Worst case is $55,000. We estimated based on the website Turo, with the average mileage per day per vehicle to be around 109 miles a day. And that brings the total mileage to the total shown with the inflation predicted at 1.5%.
Yeah, so a little bit more about the car drop-off and the prepaid revenue. So the prepaid gas. The prepaid gas is basically, so they use it every 3 times. So each time you rent a car, sometimes they do pay and sometimes they don't. And it's also with the car drop-off. So basically what I did for the car drop-off, it's $150. But because it's every 3 times, it's just a $50, and it's a fixed rate, like whichever, even if it's a best, best, or worst case. Then for a prepaid gas, what we did is that out of those $50, we said that every time they do use it, we still have to put gas into the car. So we said it was gonna be $35 on average for every time they put gas. So it's gonna be $15 that we have left, but because it's 1 every 3 times, it's gonna be $5 for a prepaid gas. Do you guys want me also? So for the vehicle, the vehicles and the vehicle costs. So the numbers in orange are actual costs for each car, and then through the websites we use, the sources, we got what its depreciation in percentage will be after the 3 years after we sell it, and then the end price of each car and how much it's going to be valued at the end of the 3 years. And at the end, you can see how much we're getting out in we get 46,218 by selling the car in revenue.
Dante, could you scroll down? Okay, so since our entire business is dependent on, renting our cars, maintenance is a huge aspect for it. So the insurance aspect of it, we're going to be financing through Turo directly, which charges around $750 per day. So that 12.15 cost over there is the standard for all vehicles, even in the best, worst, or base case. The total car maintenance for all cars is going to cost, and for the best case, around 7,394. In our base case, around 5.5, and in our worst case, around $4,178. This includes the oil change for every car, the windshield wiper replacement, tire rotation, brake pad replacement for every per 10,000 miles. For car washing expenses, we have the wash tub monthly subscription, and multiplying that by 5, that comes out to around $195 per month for all vehicles. And for the gas, customers have either the option to fill it up or prepay it, which you already discussed. And if they don't like that, we can charge them, obviously. So the total maintenance cost in our base case comes out to 10,217. In our best case, it comes out to 10,565. And in the worst case, it comes out to 5,891. And then we also have our total garage and space cost, where our cars are going to be parked at. Per month per car, it's going to cost $130. So multiplying that by 5, and then again multiplying that by 12, for the months in the year, we come out to $7,800. For tire replacement at the end of the second year, so each vehicle obviously has a different varying sizes. Some are the same, but for the Wrangler, it comes out to $900. The Accord for 300, the Mustang for 7, Sienna for 500, and the Altima for 3,000 for 300. Sorry, which comes out to around 2,700 per year. And then the total operating and maintaining cost comes out to 18,017 for our base case, or for our best case, and then 18,365 for our base case, and then 13,692 for our worst case. Given inflation and operating expenses at 1.5%, our net income could be, in our best case, around 63,262, 97,000 in our base case, and 41,238 in our worst case.
So now we're gonna go into our base case. So the plan is to buy, like we stated before, 5 cars for our business and dispose after 3 years, and then hopefully repeat the cycle. But in this model, we're only going to show one portion of that. So just the initial 5 cars, and after 3 years, selling them. So then this last highlighted time value is going to just include the only revenue is going to include is the 98,987, which was discussed in our assumptions, which we would get at the sale of the 5 vehicles. And our payback period will always be 3. If like in our base case, it'll always be 3, because our net present value will always be negative until we get that revenue at the end of the 3 years, because that initial cost is so great that we don't expect to recoup it with the revenue or the rental revenue each year. And so that's why we have the cutoff at 3. So this really, the payback calculation isn't really, I guess I would say it's not really useful, because we know it should add up to 3 at the end if our revenues are good. So you'll see later in our worst case that it'll be greater than 3, because our revenues aren't high enough to recoup that cost that we initially spent. So at time value 0, which will be today, we spent 145,205 on all 5 cars. And then in the first 6 months, we did a 50% capacity, because that's half of the year. And we said our revenue would be 29,000 with 480 rentals. Then we have our net cash flows. And then in the second, or in our first full year, we have 974 rentals and 61,822 in revenue. And in our last and final year, we have 989 rentals and $62,000 in revenue. And these revenues are calculated by our daily booking price times the number of rentals. And then we included the inflation in our revenue, which was 1.5%, as stated in our assumptions. So then this other cost portion right here is, like we stated, the tire maintenance, which we stated would be at the end of our second year, or in between the time period that we would be finishing our last year and selling the car. So we expect to incur this expense in between this time period. So we put it at the end of that last, I guess, operating year. And then we have the net cash flow, which would be the revenue subtracted by that. So it's a little bit less than it initially was. And then we have our incremental net present value here. And as you can see, our cumulative is always negative until we get that that revenue from the sale, like I talked about at the beginning. So it's always going to be negative until that last year. So similar to like a real estate business, when we incur like a huge cost at the beginning, it's not going to be our payback period isn't going to be until we expose of our asset, so to say. So then going on to our base case, same rules apply. We're going to only get a present value. Well, at least for this case, since our rental revenues kind of shot up due to what we expected is an increase in booking or daily booking price and an increase in rentals, we expected our revenues to be a little bit higher than in our base case. So as you see here, the payback period is actually a little bit less than 3, only because we incurred a lot of revenue in the first 3 years, which kind of recouped our initial cost right here. So first year at operating at 50%, we got 43,843 with 652.5 rentals. Second year, we got 1,305 rentals, which resulted in 93,947. Then last year, 1,325 rentals with 95,357. 16, same thing, tire maintenance costs, and the revenue received at the end of the life. But as you can see here, in that final year, our cumulative net present value was positive, which resulted in us having a payback period of less than the expected 3 years. So our assumption is that in our best case, we will actually recoup that initial cost before we even sell the vehicles. So this is ideal for us, but we know that this is our best case, and our base case is more probable than this. There's just something to analyze and look at. Then we have a look at our worst case, which is the complete polar opposite of our best case, where we have lower rentals, and we lowered the booking value or the daily booking price for this too, because we thought that, okay, our worst case could be the result of something that happened like the pandemic and COVID, where people weren't traveling as much, not that many cars are being rented. And to kind of incentivize people to rent cars, we had to lower the prices, which resulted in this lower revenue. So at 50% capacity in that first year, we had $19,000 in revenue with 353 rentals. Second year was 705 rentals with $39,000 in revenue. Then that last year was 716 rentals with $39,000 in revenue as well, or $39,641 in revenue. Same thing with the tire maintenance cost, which was a fixed cost throughout all cases. And then we see that our cumulative NPV is still negative up until the end. But since we didn't make that much revenue, we wouldn't get paid back until, well, this number isn't really accurate because we would get payback in that third year when we sold the thing. But basically our calculation showing that if we were to continue operating after the 3 years without selling the vehicles at the end, we would still be negative, and we wouldn't have recouped that initial cost at the beginning of the business. So that's for this worst case. And our internal rate of return here was 28%. And then I think in our base case, it was 61. In our base case, it was 29. So those are the values here. And then we have our break-even case. So this shows that at an internal rate of return of 9%, we will break even. So we won't make any revenue, but we won't take any losses either. And so this break-even point would be at 310 revenues in the first 50% capacity year, 631 in the second year, and then 640 in the third year. With these amounts of revenue, so 16,166, 3,308, and 33,584. And the same thing applies. We're selling the cars at the end of the 3 years, and then the same maintenance costs, same initial costs. The only thing that changes is our number of rentals. And then I did in order to find this, I did goal seek, and I changed the days rented per month. So this would be the amount of days rented per month in order to get this break even point. I think in our base case, we said that it would be around 16 days. And then this break even point is saying that it would be 10. So a little bit less than that. So that would be the point of break even. And like I said, we had an internal rate of return of 9.21%. And in this break-even case, our payback period would be at exactly 3 years, like I stated earlier. So now we're going to go into our intangibles.
All right. So starting off with our intangibles, if we are using the cars that we're selling as one of our personal cars, then of course, like being able to be comfortable with someone else using that is going to be dependent on the person who's selling them. So like if you have a problem with that, then you wouldn't want to be using that car. So you have to use a different car. So you have, instead of having the 5 that you'd be selling like how we are, then you'd have to have your 6 personal car as well, which could be accruing more expenses for you. And because of that, or because of the amount of cars that we're having to sell in order to accrue our like actual revenue, which is the 5 that we've found to be like acceptable for this. The amount of time that you're gonna have to commit to those 5 cars and those 5 opportunities to sell them is gonna be a lot per month, and then along with that per year. Because you can either choose to have the person meet up with you and like choose a location for you, or for them to come to you. So having to work with other people's schedules, not only yours, is going to be a lot harder for you as a seller. And then with that, the location of the host is also going to be either a win or a loss, depending on where you are selling. Like for example, like San Antonio would be a pretty decent place because like for a lot of people it is considered a tourist attraction, with the amount of stuff we have going on like throughout the whole year. So like getting families and getting people to actually like come to San Antonio and then want to have a car to drive around in, it's going to be like pretty accessible and easy. But like if you were to try to do this business in a smaller town or somewhere that doesn't have a lot of tourist attractions, then having people actually want to rent your car is going to be a lot harder. And then with that, the cars that you actually sell are going to be a good or a bad thing, like for where you are as well. So like for San Antonio, it's pretty much like there's a lot of family things going on, which is why one of our cars that we chose was going to be like a van. So the make and model of your car is going to be pushing that higher expense or higher revenue or lower revenue like per year, or per month even. And then as well as the one negative thing we saw with this project was the number of cars you have to have in order to actually have a revenue, which we chose 5 because of that like make or break part. And like as you saw from like the best, worst, or the base and worst, and even like the best case, you won't really make a profit until you actually sell the car back after the 3rd year, just because of the amount of expenses you have to actually buy the car itself, and then also like do the individual expenses per car. So having to pay for those 5 cars is almost like like the 5 cars is a base starting point for this. And then of course car accidents are a probability or a possibility, I would say. So having to deal with the insurance companies is going to be really hard, because you're not only going to have to deal with Turo and their liabilities towards you, or for you, but also your insurance companies and the policies you have in place. So depending on what kind of insurance you have, and depending on Toro and how the accident actually happened, and whether or not you were in the car or was the driver, that's going to be, or the renter from Toro, that's going to be making or breaking how much money you get back from the insurance. And with that, if let's say the Turo renter is renting the car and they get in an accident, it's more likely that you're going to be getting more money back from them and from like your insurance, because it was someone else driving it with the Turo liability in place, than it would be like if you were to drive your car, because you're renting it out to them and it's not you actually driving it. And so in the case of an accident, like of course we're dealing with the insurance, it's going to be hard. And then one good thing that could help you with this with Turo is going to be like the ratings that are in place in the app of Turo. So with each rental that you do, the person who rents it has the opportunity to actually put a review, almost like how you do like with Uber or any kind of service like that. So they can write a personal review about you and their experience. And with this, a lot of people give the examples of whether or not they were accommodating for like the renter's schedule, which is why also, like I mentioned earlier, the time is going to be a pretty big factor in this of whether or not you're able to succeed. So the ratings. If people have lower ratings, they're going to show up lower on the list, and then higher ratings going to show up higher on the list as well. So, and with that, of course, like the number of the number of rentals, the number of times you rent the car out to people is going to raise that raise the ratings overall over time, anyways. So that could be a good thing for you. And then with this service, there's no really room for hiring, which is an issue. So like you are really the sole proprietor in this business, the person selling the 5 vehicles for renting. And of course you can hire somebody like off, like just randomly, like your mom or like your friend or your cousin to go meet this person, drop off the car for you. But then there's nothing really in place to pay the person for it. It's really just one person business. And then of course competition is a big issue with this. We chose these cars, these 5 vehicles, for the sole reason of them being the most profitable in a lot of places with Toro. So like choosing a car with a lot of competition or a lot of the same amount of vehicles on there is going to be a lot harder for you to have like actual sales or actual rentings. And then with Toro, you can choose to pay to have your car listed up higher in listings, but having that is going to accrue more expenses, and then as well as it's not going to ensure that you're going to actually have people rent your car. It's still based off the vehicles you have. And then of course the state of the vehicle can be a good or a bad thing after each person rents it. So if they leave it in such a poor condition, you can charge them extra expenses based on how the car was left. But having to take care of the vehicle, so like the car wash is already included because you're going to want to make sure all the car is clean and the interior is nice. But if somebody spills something in the car, it's going to take you a little bit extra to clean it up, and it's going to be a little more for you. So that's it's going to be higher for some people, lower for some, for others. And then with Turo, you can have a lot of loyal customers with the ratings. I saw that there was a lot of people who had said, "Oh, this is my 3rd time, 4th time. Like I only buy or rent from this one person." And even if you look it up on YouTube, like there's a lot of people that have loyal customers that go to them specifically. And I think Turo does a good job with this because of the ratings. You can choose whether or not you want to have a specific person and like their specific car, like opposed to other car rental services where you just have to deal with the actual company. And if you don't like the person who's selling you the car, like the company that's selling, you can't really do anything about it. And on top of that, like with Toro, you can choose your specific car along with the seller. So like, of course, there's going to be multiple listings of the same car. So really the only thing that's going to make the difference is not only the price, of course, but it's going to be minuscule, but mostly the person selling it. So those loyal customers are going to keep going back to you or to that one person who's selling it strictly because of the accommodations that they give and the amount of services they provide per car. And then with this Toro, one thing that was a little bit of a negative was advertising. So of course, with Toro, you can only really rent the car out to people who are using the app already. And there's no real way of getting people to download Toro or like advertising for people to rent your car if they don't already have it. So having to only be selling to people with the app Toro is going to be a little bit harder for you if people already have those loyal customers. And then with this, one good thing that could help you out a lot is going to be the pictures you post on the app. So with each listing on Toro, you can, I think, post, I don't know what the set amount is, but some people have 6 pictures, some people have 32 pictures listed of the car. And having good pictures, good quality pictures that show both the exterior, the interior, and like even just the dashboard itself is going to help you out and get you to have more listings or get you to have more rentings per month. So like the people who have the poor pictures and don't spend that good amount of time trying to get the car to be listed properly, it's going to hurt them a lot more. So that's another thing that goes into the amount of time that you have to spend to have Toro listed. All right.
So yeah, that's our project.
So what's your final recommendation?
We would say that, so I think our final recommendation, we didn't write it here, but it would be the business is a profitable business, but like we stated in the intangibles, location is a big factor. So like if you're in a major city like Los Angeles, maybe even, let me not say New York, Los Angeles, maybe Dallas, Houston, Florida, then that's a good market to have Turo. But if you're in kind of a more, not, I guess, not a heavily visited city, like maybe somewhere in the Midwest, like a North Dakota or South Dakota, something like that, you wouldn't see as much. You'd be probably more closer to this worst case than the base or even best case because of the lack of people renting your car, you not being able to charge your premium because of the high demand that your cars are in. And so we would say that when doing this business, to analyze your location and do some kind of sensitivity analysis and see how profitable it would be. But if you're in a location like San Antonio, Houston, I would say it's definitely something you should do if you have the time for it and you're not really worried about, like, the car that you're renting isn't something that you have your whole like heart in it. It's not like your dream car that you don't want anyone to mess up.
So to add to that, I would say this business is a decent side business just alone if you're going to be only renting like your personal car or maybe one or two cars. But to have this actually be a profitable business for you with good profit, like meaningful profit, to have it like to have you be dependent on this, and you would need to have at least 5 cars, I would say,
Right.
and have a lot of time to commit. So if you're not able to have this up to 5 cars and like put down that money for those 5 cars, then this business won't really be super profitable for you, but it will accrue some kind of profit.
And I would also say too, like, you could do this as something to kind of, let's say you wanted like a dream car, like let's say your dream car was like a Ford Mustang, but the car payment, or I guess the expenses were kind of high. You could use this as something to kind of give you supplemental income to put towards that expense. But then of course you would have to deal with, do you want other people driving it? So I've seen some people use this as a way to kind of, I guess this would be kind of house hacking for cars. How, like, you know, how you have a house and you live in one side and you get income from other people living in it and sharing it with you. Same thing here. You could kind of car hack where you buy a car, let other people use it, and then when it's not being rented, you use it and it covers the expenses you incur with it.
Yeah, I guess a college student, if they didn't need their car every day, but they needed it at certain times,
Right.
it seems like you could control this, right? I mean, is it bad that, like, you want the car on the weekends, but not during the week? The weekends is probably the best time to rent it, but you'll get some income, right? If you rent it Monday through Friday and then you want it back on Saturday,
Right.
you might lose some customers that way, but it gets you some supplemental income if you wanted a more expensive car, didn't mind sharing it with somebody.
Mm-hmm.
Key to this project is the resale. I think your resale looks high to me, mainly because of the mileage you're putting on this car. Are you talking 20-something thousand a year, right? Is that the mileage I'm seeing?
Yes.
20,000 over the life of you're owning this, 20,000 a year. That's a lot of miles on a car. Do you really think depreciation will only be 30 to 40% if you?
So in the calculator, we used, it was an online calculator, and we put in the estimated mileage at sell life. So I think we put around 55,000 or 60,000. This is like the average price it gave us for the sell life. So this could, it could be less, it could be higher, but this is like an average. So that we could say that we get around this amount. But
well, and I don't know how, I'm curious, because obviously right now is a great time to sell a used car.
Right. I was gonna say that, yeah.
Yeah, so you wonder. It seems optimistic to me, but then I don't know cars that well. Okay, now one thing I was confused on, I noticed. I guess it was maybe Jesus was explaining, maybe it's Muhammad, but you're going to charge them $15 if they don't fill up the tank.
No, it's the prepaid, it's $50, but then we're assuming because they didn't charge it up, they can do a prepaid, but we're assuming that because they didn't charge it up at the end, we have to charge it up, fill it up. So it's gonna be like around $35 per tank.
All right, I just didn't see that in there. So the 1/3.
I think so. This portion, I think this was.
So we have like $15 left, but it's one every 3 times, so it's only $5, and that's for the prepaid gas.
Right. So they prepay it. So if they prepay, you're probably going to put gas in the car. I just didn't see where you had the expense for you putting gas in the car.
Yeah, so exactly. So from the $50 we get, I subtracted like 35, and then that's the average we decided we're gonna put in like on each car, like to fill it up again, because sometimes it's gonna be halfway, sometimes it's gonna be all the way to the
Oh, so
bottom.
they're paying you $50 for car drop off and $50 for prepaid gas.
No, it's $150 for car drop off, but because it's one every 3 times, it's only
Okay.
$50.
And the
for the
prepaid's
prepaid gas,
$50.
$50, and I subtracted the $35 from
Okay.
when we get it, and then it's $15 left. So divided by 3,
Okay.
it's $5.
Yeah, that's where you can really help your spreadsheet. You got it all built, and that's the thing. When Dante sent it to me, I was like, man, it's built so it makes sense, but boy, you've got to track it down. So it's the kind of thing in your spreadsheet. It might help to put little, because now it makes sense, Jesus, when you say that. I see you got it in there. Okay, so make sure. You mentioned competition, Gabe. I think that would probably be my biggest concern, because you're saying this really works well, it's really profitable, which means everybody's going to want to do it. I kind of think that's kind of the issue with Uber and Lyft, is the drivers just starting to compete with each other.
Right.
I did look at the car rental, so I just loaded in USA, and with Avis, they have cars as cheap as $45 a day and as expensive as a couple $100 a day. These look like nicer cars. Even the Accord is probably nicer than the $45 car. Are you charging $81 for all 5 of those cars, or is that your average? Some more, some less?
That would be the average, because like obviously we would assume that a Jeep Wrangler, we would be able to charge a little bit more than for like a Honda Accord, Nissan Altima. We could probably charge around 70. Then for a sports car like a Mustang, that would probably be higher. And then the Toyota Sienna would probably be closer to that 80 range. So we said, let's take the average price of that and just divide that by 5. And that's how we got 81. And then we adjusted that for each of our 3 cases.
Yeah, Mustangs are nice because it's a cheap car to start with, but it's a nice car to drive around, kind of like a Camaro or something.
Yeah.
You can probably charge more, even though it doesn't cost you as much. I don't know which one of them is the van.
The Sienna. Yeah.
Okay. That one you can probably, I guess it depends on your clientele, because if you're talking people that are here, for you want someone that's going to be here for 3 weeks and we just want to rent from you.
Right.
They probably don't need the Sienna. It's going to be the vacationers. So you got different crowds.
But the other thing to think about too, like you said, when you brought up the Avis thing, so Avis is $40 for the rental. And there's other other unforeseen things, like you have to be a certain age. And if you're not, they either won't rent you or they'll charge you like a premium. And there's other associated costs outside of that 40. But for us, it's just the $81 a day plus some sort of tax. And then the Turo fee, that's what they would pay every day. So that's why we think we'll be able to appeal to people who don't want to go through the Avis, who maybe aren't even, because like a lot of times these Avis and the Enterprise are located like centrally at the airport. They might have like a standby location somewhere else in the city. But for us, we can really come to you for a price, of course, or we could kind of cater to you, drop it off for you. So I think the flexibility that we kind of allow kind of helps us stand out from those traditional Avis, Enterprise, and like I think what's the other one, like Alamo or something like that. So
right, yeah, Enterprise is one I like. But well, that brings up my other question is, you're talking about ratings and loyalty. I understand that with Uber. What exactly can you do that's going to get you loyalty and good ratings that's not going to cost you a lot of time and effort? What is it that your customers are looking for that you can do that's not going to be a major pain for you?
So one really simple one that I saw a lot of comments on was whether or not the person replied to their message on Toro within a certain amount of time. So like on Toro, with below each profile, it'll say like for really like long-term people who have used the app a lot and who are doing well with it, it says like replies to messages within 2 minutes. And so having that gives you a lot more higher like loyal customers.
So that's something you just gotta, when you get the text, you just gotta,
right.
You gotta
And
stop
like that's
whatever you're
completely
doing.
free.
I would say another thing too that I saw as well, in addition to that, it's a good point. I didn't even think of it, but like having like chargers in the car just for convenience, just little things like convenience things. Like let's say your car isn't isn't standard with a GPS, so you can include like a separate, I guess, GPS for the customer to use. You can include chargers, air fresheners, and I've seen also people who, like, if let's say we drop off at the airport, in order to drop off at the airport, you have to like pay to park, right? So including some cash in there, which would be another expense, of course, but including cash in there so that they could pay for the however long the car was sitting there. And just being kind of catering and kind of providing more value than they pay for, in a sense, to kind of get them to want to come back, to feel like they're getting a good bang for their buck.
I mean, yeah, that's the big gross margin debate. You want to be able to charge a margin. You want loyalty, but sometimes it costs you more to build that than it's worth it. And you always have to sit down and say, because bad ratings would kill you in this business.
Right.
So you definitely want to know what that is. I can see replying would be important because when people are traveling, they don't want to hassle if, you reply 45 minutes later, that can be a disaster. So, okay, my last question is, so it sounds like the car wash that you're paying for is the exterior and the interior, not just the exterior?
Yes, I believe it's
It's like a complete detailing.
Wow, okay. That's not too expensive. Okay. I guess that's important. Yeah, I was wondering about the interior because you don't want to, some mess that's left in the car. So, okay. All right, that makes sense. It's a good presentation. Jacob, do you have questions for them?
No, I think you guys did a really good job. I was always really intrigued by Turo. So that was actually really insightful.
All right. Well, send me your final spreadsheet.
Okay.
And I think good, interesting. Yeah, I don't think I'll do this, but because I don't know enough about cars and know what excites people, but it's an interest. I love the gig economy, and I love that people are finding ways to get more out of the assets that they own. So it makes a lot of sense. And it's all software driven like everything else in our worlds. All right, good job. Interesting.
Thanks. Where do I send
thanks.
it to? Just email it to you, or
yeah, just email it. Just email
Okay.
it. There's nothing on Blackboard.
All
All right, thanks, guys.
Thank you.